come to order as much as we can with this live streaming and remote hearing. A couple of things, just we'll repeat it again. We'll be streaming through Senate Media and on YouTube. Please mute if you don't want your face on at a particular time. Just shut off the video. I'm going to start with some opening comments, and then we will let our smart people, Nora, Eric, Jay, and Bjorn run through the proposal. Then we'll go to testifiers, and then at the end, we'll go to the members for questions and comments. We have an hour and a half, but it's vitally important we listen to testifiers and what they have to say. All right. And I don't think I've forgotten any other, as they say, administrative housekeeping things. We thank all of you for taking time to join us this morning. We'll probably have another one of these next week. It's a little difficult to manage through distance, but the staff is doing an incredible job of organizing it. So thank you for showing up and taking part. I try not to use cliches and overused phrases, but difficult times, and we need to do some extraordinary things, start recovering. There's an old, we simply have to move forward. There's an old saying that if you're not moving, you're dying. Movement is life. And we have to start thinking about the other side of this COVID issue if we're to continue as a solid, prosperous state. And the backbone of that, the lifeblood are employees and employers. That is where we, of course, get all of the funds to operate the state and provide the needed services to those who need it the most, seniors and low income, et cetera. So it is vitally important, I think, as a committee, no matter who we are, Democrat or Republican, to work towards solutions that solve this problem. This is an informational hearing on a set of proposals. Most of the proposals you have heard before. They're not new. They were part of legislation in the past. Some of them are new, but there's nothing complicated or surprising about them. So my hope is that we can all come to some agreement to address this issue so that on the backside of this, and right now we can start thinking about how we aggressively and assertively address this so that our small businesses, our employers and employees can get back to work to do what they have to do to make sure we minimize the harm and limit the damage. So these proposals will impact people from Main Street all the way to the top, farmers and schools and charities up and down the chain. It is just vitally important we agree on something here to continue going. If we don't have them working, we have no cash flow. And we need cash flow. So the debate will be on where are we going to get it. And I think our employers and employees need that the most because that's where we're most secure. So with that, I'm going to say thank you again. And I suppose we'll start with Nora. Nora Pollock. Ms. Pollock, if you would mind walking through this legislation real quick, you and Eric. Unmute.
Sorry, Mr. Chair. Yes, Mr. Sylvia and I will walk through this, and then I believe Mr. Arneson has a section as well that he can discuss. I'll start with section 1, the angel investment credit. This section would remove the sunset on the credit, so the current allocation, which is at $10 million, would be ongoing.
Mr. Chair, section 2 deals with levy equalization for school district voter approved referenda. And this section essentially has two different effects. The first effect would be to increase the equalization factors that are in play under the current formula, which uses school districts' resident pupil units as one of the inputs to the formula. And the second effect would be to introduce an alternative way of calculating a school district's equalized levy, which would be to use that district's adjusted pupil units as an input to the formula. And this would have a positive effect on those school districts that have a fair amount of net open enrollment into the district. And this proposal would be first effective for levies payable in 2021.
Mr. Chair, continuing on to sections 3 and 4, these would provide full section 179 expensing going back to tax year 2018. Section 5 reduces the rates on the combined net receipts tax. Section 6 just provides that the stadium reserve account is held harmless in any case resulting from the reduction in the rates in the earlier section. Section 7 modifies the star rating thresholds and the aspects of the annual reporting requirement for the charitable gambling organizations. Section 9 provides a special penalty exception for some results that occurred after the TCJA repealed the like-kind treatment for personal property in like-kind exchanges. So this would provide for somewhat of a penalty relief for taxpayers who qualify under that section. And then Section 10 provides for a suspension of certain estimated tax payments, essentially individual filers and would have an extension to June 15th, which the department has already done, but this would just be essentially codifying that. And this would also apply to anyone as corporations, partnerships, and so forth who file as individuals. And then for corporate filers, these are a little different because they file on not necessarily a calendar year. And so what this would do is for filers that have their quarterly payment due in May and then June would be able to submit their that quarterly payment in the next quarter, which would be August and September, respectively. And this section also provides that penalty and interest don't apply for those payments that are made within the extended timeframes. Section 11 provides for extension of filing and payment. Actually, Mr. Chair, I'm sorry. I need to correct myself in Section 10. The individual filers, there is not under the commissioner's allowance an estimated payment extension for tax year 2020. So I just needed to correct that. Going on to Section 11, this would extend the filing and payment deadline for 2019 taxes. Again, individuals have already been received an extension to July 15th. This would also codify that and extend the filing and payment deadline for business entities as well. That would be till July 15th. And then it would also extend the occupation tax, which is due May 1st to July 1st, 2020 by 60 days. And then it also provides that payment, interest and penalties cannot be applied until after those respective dates, July 15th and then July 1st for the occupation tax. Section 11 allows for a suspension of the June accelerated sales tax remittances. These payments are due on June 20th for a large percentage of the expected June sales tax liability. And this section would just say that the June liabilities can be remitted in July. And also provides that any penalties and interest cannot be applied until after that July date.
Mr. Chair and members, Section 13 extends the due date for the state general tax or the state general levy Under current law, the first half payment is due on May 15th, and Section 13 would extend that by 60 days until July 15th. Subdivision 2 of Section 13 would also require that the counties remit any tax receipts of the state levy received after the last settlement day in May up to and including July 15th, and remit those to the Commissioner of Revenue. And Section 14 establishes a 2-year moratorium on reclassifying short-term rental properties. These are properties that the county has determined its primary use as being a short-term rental. And based on some inconsistent treatment among counties in the state, this would require that for assessment year 2020 and 2021, these properties would receive the same assessment classification that they received for assessment year 2019.
And then finally, Mr. Chair, Section 15 is just a repealer of the sunset provisions for the Angel credit as that was extended permanently in Section 1.
Okay, thank you very much. Mr. Wilms, did you have any numbers available for us?
Mr. Chair and committee members, last evening I sent out a Senate Taxes Committee tracking for the estimated budget effects of the bill. The majority of the estimates were contained in revenue estimates provided by the Department of Revenue, DOR Research, and DOR Property Tax Research. And then an additional estimate related to the referendum equalization language was provided by the Senate Tax General Education model, modeled by Mr. Arneson. So I can briefly walk through the spreadsheet that was sent last evening. Beginning with on line 1, these are general fund effects. Line 1, section 1 of the bill shows the effect of eliminating the sunset on the Angel tax credit. The staggered nature of when the credit's allowed is why the fiscal year effects are staggered on this tracking. So it allows it for tax year 2022 and then beyond the budget window for a total of 10 million revenue reduction each year. Line 2 and line 7 reference the elimination of Minnesota's treatment of Section 179 expensing. And you can see the corresponding revenue effects there in column E. And then line 3 shows the delayed estimated payments for tax year 20. These are the first quarter, second quarter, and the first 2 payment period delayed tax payments for tax year 20. Additionally, on line 8 of the budget tracking, you can see that this is there's the effect on the corporate franchise tax receipts. So an individual and a corporate franchise tax effects for that proposal. One other thing to note is footnote A. Many of these provisions contain an equal and offsetting shift between fiscal years, between fiscal 20 and shifting it into fiscal 21. And so the net effect is 0 on a budgetary accounting basis for the biennium. But one thing to note, and it's also noted in the section, on the note section, that there could be cash flow risks related to that are not discussed within the tracking. Moving on to the next section, corporate franchise. The only other thing left to discuss in that are delaying the final filing and tax payments for tax year 19. Again, that's a shift between fiscal year 20 and 21 with a net effect on the biennium for 0. Moving on to line 13, this is the effect of suspending June accelerated payment requirement for June 2020. And one thing to note about this is it also includes the amount that applies to the liquor gross receipts tax as well. It's embedded in the number. Next on the tracking is line 17. It shows the effects of the charitable gambling rate reductions. The first tier rate is reduced by 1 percentage point from 9 to 8%. The second tier rate is reduced by 2 percentage points from 18 to 16%. The third tier rate is reduced by 3 percentage points from 27 to 24%, and the fourth tier rate is reduced by 4 percentage points from 36 to 30%. This is the combined net receipts, which applies to the electronic pull tabs and other forms of charitable gambling. Line 21 shows that there's no effect from the extension for filing and payment for the occupation tax. And then lines 25 through 27 show the property tax provisions and those effects. The first two have a budgetary effect, and then line 27 just shows a shift. Then we get to line 30, which is the total general fund effect. In column E on line 30, you see the net effect minus all the offsetting shifts is a reduction in revenue of $258.3 million in the first biennium and $123.8 million in the second biennium. The other thing to note about that is all of these numbers are using the baseline February 2020 forecast as the baseline assumption. So another caveat and thing to keep in mind. And then past that, the non-general fund effects are listed on line 37, and that's related to the suspension of the June 2020 accelerated payments. And that concludes everything I would have to say about the tracking.
Okay, thank you, Mr. Wilms. Mr. Aronson, do you have anything to add? He shakes his head no. I think a lot of things are scalable, of course, but the equalization is scalable. I think we had it pegged at about $20 million to start, or so it can go up or down from there. So you can add that to that as well.
Yeah. Mr. Chair, just to clarify your point on that, though, under the November forecast, I think your language did spend a little bit closer to $20 million, but with revised February data, it became a little cheaper, but it is scalable up or down in any direction.
All right, thank you very much. Okay, so with that, we will go to testifiers, and then after the testifiers, we'll get to the commissioners here too. Commissioner Bowerly is here. We'll also have her offer comments as well. So let me see who we can go first on my list. I'll just go by my list. Mr. Sturgis, are you here on?
I am. Yes, I am. Yes, sir.
Okay, gotta locate you here. Okay, there you are. So again, we have a lot of folks here, so 3 to 5 minutes and we'll get through this, but your thoughts and testimony are vitally important. So Ms. Sturgis, announce your name for the record and who you're representing, who you're with.
Okay, well, thank you for having me participate in a session with the Senate Tax Committee. I am John Sturgis, the owner of Adago Pet Hotels. I'm an adjunct faculty teaching entrepreneurial management at the University of Minnesota's Carlson School of Business, a School of Management, on the board of directors for the Twin West Chamber of Commerce and the lay advisory board for the Catholic Archdiocese of Minneapolis-St. Paul. But today I'm representing Adago Pet Hotels. Adago Pet Hotels offers boarding, daycare, and grooming services for dogs. We have over 90 employees at 4 locations in Minnetonka, Hopkins, Maple Grove, and MSP Airport in Richfield. We are a cash business and have lost over 90% of our business and revenue due to COVID-19. Due to the stay-at-home order, we have shut down our grooming services, but we are still offering boarding and daycare services because those are considered essential. According to the American Pet Products Association, APPA, U.S. pet industry expenditures have been growing by $2 to $3 billion since 2010 across 2018 expenditures were $90.5 billion. 2019 were $95.7 billion. And estimated expenditures for 2020 before COVID-19 were $99 billion. 63.4 million families own a dog and 42.7 million families own a cat. The pet industry is the 7th largest industry in the United States, with over 1/3 of families owning a dog. As the owner of Adago, we opened up our first facility in Minnetonka Minnesota in 2010 and our fourth in 2016. We are hoping to continue growth as the demand and fundamentals for pet care are strong. Once the coronavirus became prevalent, our business fell off quickly in the same way it has affected restaurants, hotels, dry cleaners, fitness facilities, and other service industries. Service industries businesses employ a lot of people that help drive economic conditions in their communities and across Minnesota. We have had to furlough over 50% of our staff and are now self-funding our business while we wait for stimulus dollars to fund our accounts. We are working closely with creditors and vendors to defer accounts payable when possible. Many of our vendors are in the same boat that we are in, so can't defer payments. Regarding government involvement, I suggest the following 4 areas to focus on. First, either forgive taxes, give tax credits, or give longer times to pay taxes. For example, 1 or 2 months does not help when you're a cash business, and that's what most service industries are. We need at least 6 months. Faster economic decisions by the state, especially during disasters such as coronavirus. Third, conformity with federal changes. The federal government makes changes, the state of Minnesota seems to lag very far behind. The Minnesota stimulus is not optimal because it is only available when you can't get other funding. Once you know you can't get other funding, it's probably too late for most small businesses, especially if they're cash basis. And I applied the day it came out. I haven't heard anything from the Minnesota stimulus through deed. Regarding tax issues, sales and use tax, payroll tax, income tax, and real estate tax needs to be considered. I also understand that real estate tax is driven more through the county, but those all need to be considered. We need extensions at least 6 months for these taxes and forgiveness if possible. Also, service charge utilities, for example, water, can be either forgiven or deferred. Please understand that most service businesses are cash basis, so are affected immediately when demand drops. Most of these businesses are also small businesses and are owned by individuals. We have not been affected due to bad business practices, but because of something out of our control, specifically COVID-19. So we ask the state of Minnesota to work with us because we are all in this together. And I'll give you a specific example. One of my locations, my Minnetonka location, that location, last year we were at $69,000 in revenue month to date. So as of the first 15 days of the month, we were at $69,000 in revenue. Month to date this month, we're at $3,000 in revenue. Thank you for the time. I'm also available for any questions. Oh, Senator, I think you're on mute.
Next up is Troy Redding and then Mr. Gleason. And just a friendly reminder, we'd love to hear all of you. So it's got to be 3 to 5 minutes, all right? Thank you. Go ahead, Mr. Redding, you here?
I am. Thank you, Chair.
Thank you. Go ahead.
Good morning, Chair and members of the committee. My name is Troy Redding, and I own 3 restaurants in the Twin Cities. I've been in the industry for 34 years, 24 of those in the corporate sector and 4 working for a local restaurant group. 6 years ago, I found myself unemployed for the first time in my life. There's a saying among restaurant people that you don't own restaurants to make money. You own restaurants for the opportunity to employ people. I was okay with that, so I made the decision to stay in the industry, and with the help of my good friend and partner, we opened Rock Elm Tavern in Plymouth in September of 2015, using our own money and a shoestring budget. I worked hard to build the business and became a gathering place for our local community. We supported the schools, the city, and local charitable organizations to strengthen our brand and our culture. My staff, partner, and I worked tirelessly to control costs and build relationships, and were able to have a successful restaurant in a space where many others had failed. In order to spread overhead costs and leverage buying power and labor usage, we decided to expand. We looked hard for the right opportunities. In January of 2018, we opened Holman's Table at the St. Paul Airport. We followed that with our second Rock Elm in Maple Grove in September of 2018. This past January, we used an excess 1,500 square feet that we had in Maple Grove to build out Sugar and Spice Sweetery, a custom cake and sweet shop that utilizes the same kitchen as Rock Elm. At the end of February, all 4 stores were ahead of prior year sales by double digits, and all were profitable for the first time. It was looking like we were going to have a great year and be able to start looking for the next location. Now everything has changed. With the governor's executive order on March 17th, we closed Holman's Table and began takeout only at the 2 Rock Elms. We limited our hours and our menu in order to try and execute a service model that we were not used to. We also laid off 133 of our 159 employees. Over the past 4 weeks, our revenue is approximately 25% of normal revenue. On top of that, I've now reduced the hours and pay of 16 of the remaining 26 employees so that they can apply for unemployment and receive the additional federally supported $600. We've applied for loans, and as of yesterday, I was notified that our PPP loan had been approved. However, we are wrestling with the fact that our employees can make more on unemployment than I can pay them. Therefore, our chances of getting the loans forgiven are nil. The margins in this business are razor thin to begin with, and adding additional debt, no matter how cheap, is not very wise. I anticipate that we'll use some to keep operating, but the majority will just give back. As for taxes, the fact that taxes and sales and use taxes are deferred is helpful, but that's just kicking the can down the road. Even when reopening, we will have a new normal. I anticipate the reality of table spacing and social distancing will impact our sales by at least 25%. I'm not even sure that we'll be able to reopen Holman's Table this summer. At a minimum, sales and use tax needs to be deferred for 6 months. I would also suggest that they be abated during the length of the shutdown and the time we will be restricted by social distancing measures. The hospitality industry supplies 18% of the sales tax revenue for the state. A current poll by the Minnesota Hospitality Association finds that half the restaurateurs polled estimate that they have 1 to 3 months of ability to reopen. A safe estimate is that at least 25% of restaurants will not open at this point. Tax relief, sales and use, property, workers' compensation are ways you can help us help you. We need to have a long-term view towards the revenue for the state and the viability of our industry. There's no doubt that the landscape has changed. Those who are thoughtful and creative will be the ones to make it through. I ask that you are thoughtful and creative with your approach to this pandemic, and I thank you for your time.
Thank you, Mr. Redding. Next up is Mr. Gleason. And then after Mr. Gleason, we will have Ms. Ransom. So Gleason and then Ms. Ransom. All right, Mr. Gleason, go ahead. State your name and who you're with.
Good morning. I am Bill Gleason with Gleason Printing. We are a small commercial printer in St. Louis Park. I purchased the business from my father in September of 2019. So welcome to 6 months in business for me. I've been running the business for about 2.5 years, so nothing's really changed for me. We had, back in January, we had 9 full-time employees, 1 part-time employee. We have not laid anyone off. We had an employee resign and an employee leave due to disciplinary action. I find myself being very fortunate that we are only down 50% from plan, 40% from last year. That being said, 25% of our business comes from events. We print a lot of invites to galas and other events. We also do mail for businesses. We do some billing for some small utility billers. We do books and manuals for people like the University of Minnesota and other organizations. We also fulfill some posters for nationally required programs in the farming industry. So because of that, we're essential, but that doesn't mean that it's all great that you're essential and can still work. Being that this is an 80-year-old business, my grandfather founded it. There's been lots of ups and downs since 1940. I share the same name with my grandfather, which is pretty unique. But we have a lot of good things going on. When we look at taxes from a business like ours, that if we bill something for $60,000 at the end of the month, I pay those taxes on the 20th of the following month when I may not have received that money yet. And sometimes you don't get paid for 60, 90 days. So yes, sales tax is not my money, it's the government's money. Once I collect it, I do think it needs to be paid once it's collected. I would like to see us have maybe a little more time to pay that. I was trying to replace one of my positions last week. I had two people that I interviewed for a job that was paying between $18 and $24 an hour. They said they make more money at home doing nothing. So that's kind of tough when we hear, oh, people want to be employed. Well, do they? So we need to, I know some of that's a federal issue that's not anything with the state, so I understand that. Property tax extensions as well, that's great, but I still owe the money. Maybe I can pay it over a couple months. That will help us out. I will pay my taxes because I can. I was set up to be successful, and we're very conservative with our money, but I find myself very lucky. Thank you for listening to me, and have a great day.
Thank you, Mr. Gleason. Thank you very much. Ms. Ransom, and then next up would be, after Ms. Ransom, Mr. Peterson. Ms. Ransom, you here? There.
I am. Thank you,
There you
Mr.
are.
Chair and members of the committee for allowing me some time this morning. My name is Christy Ransom. I'm the president and CEO of the Winona Area Chamber of Commerce. I have the honor and privilege to work on behalf of businesses every day, like many of the testifiers that preceded me. Right now, as you well know, we are faced with questions and concerns that range from worrying about the safety and social distancing on a manufacturing production floor to listening to a business owner in tears state that they don't know if they will ever be able to reopen their doors again. Many of these business owners are awaiting PPP funding, but there are several that fall into a loophole that prevents them from qualifying. And with 75% of the federal dollars spoken for, many fear that they won't see the help that they need in time. This brings me to my main request today, and that is the May 15th deadline for property taxes. I'm strongly urging you to extend the property tax deadline for 60 days without any incurrence of late fees or penalties. And while I know this is currently in the hands of counties, I also know that not all counties have the reserves to make the extension. And I will say that we in Winona County are blessed to have a county board that did already make that determination for our businesses. But we do have businesses that have expressed frustration where they have brick and mortars in multiple locations, multiple counties, and without that conformity, they have the confusion of trying to maintain a balance of both. I do know that with everything that's coming at these businesses on a daily basis, they're overwhelmed as it is. So to be able to have something that's a little bit more, anything that's across the board and balanced with conformity helps them immensely. I can say with certainty that there are many businesses across the state that may be using the last funds that they have to pay those taxes. They may not have those funds at all. And this could mean the difference between staying afloat in waiting for federal funding or closing forever for many of these businesses, especially those that we've heard from already, in the restaurant industry, the bar industry, and others that have been forced to close or reduce their income by exponentially. And while there may be additional asks and tax changes that are going to be needed to aid in Minnesota's economic recovery, such as the Section 179 conformity, my primary focus today is to stress the urgency for the state to act on this property tax extension on behalf of all Minnesota businesses. Thank you.
Thank you, Ms. Ransom. Thank you very much. Mr. Peterson, you're up. And then Ms. Kadoun, you're on deck. Again, Mr. Peterson, 3 to 5 minutes, and state your name and who you're with for the record.
Thank you very much, Chairman. Eric Peterson here from Creggens Resort, definitely an icon in the resort industry here in Minnesota. I have the honor to work for Dutch and Irma Creggen, who have owned the business, or Dutch's parents have owned the business. We are now entering our 90th season of operation here at Creggens. I just want to share a little bit how it's been affecting our business. The layoff numbers, I have made the decision. I've had to make the tough decision for 3 rounds of layoffs in 4 weeks. So we've continued to lay people off. We have 160 team members currently that have been laid off and are filed for unemployment. And this is currently our off season. So you can imagine how many it will be as we continue into the season. So far, about 90% of our group business through the month of June has already canceled. That's over $2 million worth of business. And another $2.5 million for the rest of the year is in jeopardy as well. We're getting calls every day. If you do have a pen, I'd love for you to write down some of these cash flow numbers. In the past 30 days, these are numbers from Creggens Resort. We took in 2019, a note, advanced deposits, people coming in for future stays, $461,000 in advanced deposits the past 30 days last year. This year, we have returned nearly $300,000 of advanced deposits. We have taken in a few optimistic people, but the net difference in deposits has been $600,000 in the past 30 days. This is a time of the year where we're already taxed in the resort business. We are already borrowing money. We're into our line of credit currently. And then to note, the next 30 days, what happens in the next 30 days in the hospitality industry is critical. In 2019, the next 30 days, we took in $702,000 worth of advanced deposits. So that would be deposits coming in between now and May 15th. And if things don't change, we could see a net where we actually give more money back than we take in. Phone traffic is down about 80%. That's only in the vacation sales department. A third of the calls that are calling in are still canceling for the upcoming summer. Another third are asking what the policy is about canceling. So every day that passes, I have to emphasize, every day that we pass that we don't have an opportunity, even a plan of reopening. So, I know this is the tax committee, but, we need, and in the tax committee, you need revenues. So without even having a plan to reopen, we're losing our optimism for the upcoming summer. I currently estimate we could see upwards of $2 to up to $4 million of new debt, depending on when we get open here at the resort. And that new debt will be burden on the company. We'll make it through. We have equity in our property, but we're going to have this anchor on us for many, many years to come. We appreciate any deferring payments. Obviously, the property tax issue is very big to us, as well as any other sales tax, delays do help. But without money coming in, then, whether we push it back 60 days or even more might not matter. We do not have the cash. So Creggens, again, it's time to get together, and make a plan, try to get some businesses starting to open up, the ones that are safe. We have to get people to come back on vacation. I do want to emphasize one last thing before I hang it, or two things I'd like to make note of. Not everybody up here in the North Country are trying to keep people from coming up here. I know that's a narrative in the industry right now that, the county commissioners and people are saying, stay away from, don't come out of Minneapolis. we're ready to see some people coming back up here in the Brainerd area. And the last thing to note, if anybody has any influence on hotels and resorts have been excluded currently from the Disaster Relief Minnesota Fund. These are businesses that have been forced to close. So anybody that can help that, the Minnesota Deed Relief Fund. So again, I thank you for your time, and I kept it under 5 minutes.
Thank you, Mr. Peterson. Thank you very much. Ms. Kadoon, you're up, and then on deck is it McQuarter? McQuarter would be on deck. Ms. Kadoon, go ahead.
Thank you,
State your name for the record. Who are you with?
Thank you, Mr. Chair. Beth Kadoon, I represent the Minnesota Chamber of Commerce. During this time of crisis, Minnesota employers have been doing all they can to ensure the health and safety of their employees and their customers, while also trying to maintain the ongoing viability of their businesses. Businesses of all sizes, all across the state, and virtually all industries have been negatively impacted as they've been required to shutter or have seen a tremendous drop in their revenue, as you've heard from testimony today. This is placing a serious strain on the continuing viability of some employers. As you have heard from the business today and realize the testimony they provide today would be true for tens of thousands of employers across Minnesota. We appreciate the work that you've done, Mr. Chair, to put forward tax provisions that will be important for Minnesota's economic recovery by encouraging investment, entrepreneurship, and providing tax relief. For example, we support the Section 179 conformity, the June accelerated sales tax, the Angel tax credit, the income tax payment extensions, and others. I would also urge you, when you move forward, to consider additional tax items that will need to be considered from the Federal CARES Act. That will be also important for Minnesota to conform, such as the interest expensing cap, as that will be important to help Minnesota businesses that now have taken on more debt or have seen their income go down. Today, I want to focus my comments on an item that does need immediate attention, and as that is the deferral of the May 15th business property tax payment. This is a large fixed cost, as you heard, that is quickly approaching. There's a letter that was provided from a broad coalition of 80 business associations and local chambers of commerce asking for this state action. This will help provide much needed breathing room, but as you've heard, it might not still be enough and we may need extra time. This will help businesses until they can be back up and running, until they're earning income, and until loan assistance arrives. As you've heard, there's been an issue with loan assistance as well. There was a headline in today's Star Tribune that highlights SBA Lifeline falls short. And in the article, they mentioned that loans have been slow to come and will not help all businesses. We're asking for the state to take the same actions that have been occurring in the private sector many times, which is providing leniency and deferral of payments until they can get back up and running. At this point, we're not asking for forgiveness of the tax, just a short-term delay to provide some much needed breathing room. Timely passage by the legislature is needed within the next 10 days in order to allow for sufficient time for taxpayers to be notified and for the counties to administer. We believe this needs to be done at the state level. The shutdown order occurred at the state level, so relief should be provided at the state level. So there's uniformity across the state. Payment due dates are set by state statute, so this is completely within the purview of the state legislature. We thank the chair for your proposal to defer the state levy portion, but we think a broader approach is needed. We need to be providing relief for the total property tax payment. The state levy is about 20 to 28% of the property tax bill, so that's helpful, but that's not enough. We need more. We appreciate the efforts by some counties that have already taken action. As one county official that took action in Winona mentioned, the county, cities, school boards, and townships all have reserve funds. What other than right now will ever be considered an emergency? We urge you, as I mentioned, to take immediate action on the property tax delay, and we'll look forward to working with you on additional provisions that will be needed to get our employers, our employees, and the economy back up and running. Thank you.
Thank you, Ms. Kadoon. Mr. McQuarter, and then on deck is, I believe is Ms. Leisner, I'm sorry. Okay, Mr. McQuarter, did I get that right? Go ahead. State your name for the record and who you're with.
I'm Lonnie McQuarter, owner of 36 Refuel Station in Minneapolis, Minnesota. I want to thank you, Mr. Chair, and members of this committee for hearing my testimony this morning. I'm a single owner operator of a convenience store in South Minneapolis. We employ 8 people and still looking to add more on even in this environment. Been in business since June 9th of 2005. So in a couple months, we'll be celebrating our 15th anniversary. I want to speak to specifically Section 13 on this proposal and my support of it, and why I think that property tax a delay is important. We saw from from a macro level what was announced yesterday from the Census Bureau about retail sales being off 8.7% and whatnot. Specifically, if you look at convenience store gas stations, it was off about 18 and 17% year over year, and the shift between the months of February and March, to be a little bit more specific there. You know, that's a cause of concern for myself. I like to keep my staff gainfully employed, and being able to look at the consumers' faces each day, really, you can see a lot of confidence at times. You can see a lot of also anxiety in some as well with what's all been going on. By being able to delay our property tax payment, the state portion, and hopefully the counties will follow afterward, it's going to allow us to, with the additional cash flows, to have a little bit more confidence moving forward in terms of planning for the future as well. So I'd ask for the committee's support on this as well, and it would be much appreciated from those of us in the retail sector. Thank you.
Thank you, Mr. McWhorter. Thank you for your time. Ms. Leisner, and then on deck is it's Paul Iger. So Ms. Leisner, then Mr. Iger. Go ahead, Ms. Leisner, state your name for the record and who you're with.
Thank you, Mr. Chairman. My name is Genevieve Leisner.
Leisner.
It's all good. I am one of the legislative chairs for the Minnesota Shopping Center Association and a senior property manager at Cushman & Wakefield, which is a leading global real estate services firm. I personally manage a portfolio size of over 1 million square feet of retail real estate in multiple Minnesota counties, including Hennepin, Dakota, Ramsey, and Washington. My tenants range from your local business entrepreneur in a 750 square feet space grooming dogs, all the way to a 97,000 square feet national retail department store. I am here today to share with you the struggle that our industry has been experiencing over the past several weeks due to the coronavirus outbreak and mandated business shutdowns. Although we can understand the purpose of these shutdowns and agree that the health and safety of our community members is priority, there is no denying the impact this crisis has placed on the retail industry. In April, in my portfolio alone, we experienced a 67% decrease in collected rents, and other members in our association expressed an up to 80% decrease. Keep in mind that in March, most tenants had at least a partial month of operation and revenue earned. However, here in April, I only have 27% of tenants operating in some form. The rest are closed entirely. So why is this important? Well, the reason it's important is why I'm here today. I can tell you firsthand, we have all been working together with our tenants to figure out deferment plans to put each of us in a position of success for when all businesses are able to operate again. The problem we're now facing with these deferments is our centers will no longer be cash flowing for a few months. Our tenants are leaning on us, and now we're looking to lean on you. I want to thank you for considering the proposal to extend the real estate tax deadline 60 days to July 15th. This is extremely necessary, and it will allow our industry the time to catch up after lost months. From what me and my colleagues see, on average, the state portion is only a quarter or so of the overall tax bill. So I would also encourage that you encourage other counties to do the same in extending the deadline. We're not looking for relief, just more time. I hope you and your families are staying safe and healthy. I appreciate your time. Thanks, Mr. Chairman.
Thank you, Ms. Leisner. Mr. Iger, and then Mr. Patrick's on deck. So just so you know, it's Iger, Patrick. Last one, if Mr. Hilgert wants to speak, and then we'll have the commissioner offer comments if she'd like. So go ahead, state your name for the record and who you're with.
Mr. Chairman, members of the committee, my name is Paul Egger, and I'm with the Minnesota Realtors Association. Thank you for the opportunity to offer some brief testimony on the bill language before the committee this morning. Mr. Chair, Minnesota Realtors supports Section 14 of this bill, which requires that properties the county assessor determines to be used for short-term rental purposes receive the same property tax classification for assessment years 2020 and 2021 as the property received for assessment year 2019. This language is in response to guidance issued by the Department of Revenue to all county assessors last May regarding classifying short-term rental property. We are concerned implementing that guidance will result in a significant increase in property taxes for many property owners around the state and a county-by-county patchwork of methods for determining primary use. The language in Section 14 provides some time for the legislature, the Department of Revenue, and stakeholders to have a thoughtful and thorough discussion regarding a permanent policy solution that is fair to all parties. Mr. Chair, Minnesota Realtors also supports Section 13 of the bill, extending the due date for the first half payment of the state general tax. So I just want to concur with Ms. Kadoun from the Chamber's comments earlier. And we also signed on to the letter in your packet from the United for Jobs Coalition requesting a 60-day extension of the property tax payment for business property taxpayers. Finally, Mr. Chair, although we've had a lot of discussion about the effect that the COVID-19 peacetime emergency has had on businesses, it's also having an impact on individuals. And along those lines, we would support extending the due date for homestead property tax payments as well. Thank you for the opportunity to testify this morning.
Thank you, Mr. Iger. Appreciate it. Mr. Patrick, and then Mr. Hilgert is on deck.
Thank you, Mr. Chair, Senators. I'm Bobby Patrick, and I'm the Vice President for Strategic Growth and Policy for the Medical Alley Association. We'd like to thank you for the opportunity to share our thoughts on this proposal. During this difficult time, programs like the Angel Tax Credit are important to supporting entrepreneurs throughout the state. We are already seeing a reduction in access to capital for our startup community, and funding the Angel Tax Credit will not only help ease this tightening, but send a strong message that Minnesota understands the key role the startup ecosystem plays in our economy. The Angel Tax Credit has also helped to launch companies that are benefiting Minnesotans and people throughout the country in another way as well, helping to combat the COVID-19 pandemic. These companies include Zipnosis, whose virtual tool has helped keep vulnerable patients out of the clinic, and in March alone, saved more than 70,000 in-person clinic hours, and in the first weeks of the pandemic became one of the largest telehealth companies in the world by volume. Clinician Nexus shifted their platform from connecting health systems, teaching institutions, and students with each other to teaming with COVID sitters and supporting frontline healthcare workers by helping them manage their households while they are serving patients. Pops Diabetes, whose CEO has testified in front of this committee in years past, has made their virtual coach free of charge to anyone with diabetes during this crisis. Diabetes is recognized as one of the underlying conditions most likely to cause complications during treatment for COVID-19, so helping these patients stay healthy at home is particularly important. The Angel Tax Credit Program was a key part of ensuring these companies are around to help with the fight against COVID-19. The proposal before you today will help fund the next generation of health technology, food technology, clean technology, or just high technology that will be part of combating whatever the next threat is that we as a state, country, and society may face. We'd also like to share our thanks and support for fully conforming to Section 179 expensing, for delaying estimated tax payments for individuals and businesses, as well as extending the due date for the state general levy, as these will help with cash flow that is critical to keeping employees paid and employers afloat during this challenging time. Thank you.
Thank you, Mr. Patrick. Mr. Hilgert, do you have a word or two? Our friendly man from the counties. We have a little levity today even, can we, Mr. Hilgert?
I hope so, Mr. Chair, and thanks.
You could have 27 words. How's about that?
Oh, I hope it's a little bit more than that, because I think you'll be interested to hear what the counties are doing. You're already hearing from a lot of the testifiers that counties have acted. So I'd love the opportunity, if you don't mind, Mr. Chair, to kind of just review what counties are hearing and talk about that.
Thank you, Mr. Hilgert. Go ahead.
Thank you, Mr. Chair and members. Thanks for allowing me to be here today. And I wanted to provide some context into the conversations that counties are already having surrounding the issue of property tax relief. And as you are well aware, and the chair is very well aware, I'm sure, on putting together this proposal, conversations aren't easy or simple, and there are a lot of factors and impacts that go along with any kind of decision, including the who is a program targeted for. Is it targeted for businesses or just 3A properties or just COVID affected businesses? Do we include residents, et cetera? What a program looks like. Is it state administered credit, or is it something that's done at a local level? Or is it a pushback of dates? How a program is administered and what the corresponding impacts are at both a state and local level. In lieu of these questions and discussions, the Association of Minnesota Counties has put together a memo for all our members. We sent that out about a week and a half ago. That's intended to outline the existing authorities provided to counties in Minnesota statutes 279.11 and 375.192, as well as providing some context into these statutes. So what's clear to me when we read these statutes is that there is clear authority for counties to abate penalties and interest, but that these statutes were probably not written with COVID in mind, and that the uniform application over huge expansive property classifications for these two issues, which is the abatement of penalties and interest, or even the abatement of market value, have not been used at a uniform level within counties. Most often, what I've heard from members is that they've used these powers historically to abate any kind of penalties associated with late payments if there were mistakes or clerical errors, or in the case of the Madelia fire, that's the most recent example we have of actually abating market value. But again, that was for about 10 properties that were affected by a fire on Main Street in Waukegan County. Over the last 2 weeks, we've seen a dramatic increase in counties either citing interest and passing their own relief package, or having preliminary discussions with their board on how to address this issue themselves by providing relief to residents to the best of their capabilities. In a recent survey that we had as of this Monday with our membership, 43 counties out of 65 correspondents, so that's close to half of the state of 87 counties, said that they were either planning to act or in discussions on what action would look like. And the main takeaways I've gotten from our membership on this is that most counties believe, most but not all, that a statewide approach would be the best approach in terms of treating taxpayers equally and not having confusion among different tax groups or geographic areas of the state. I believe the testifier, Ms. Ransom from Winona County, stated it pretty eloquently in that a patchwork could be confusing and treat taxpayers differently depending on what areas of the state they are in. With that being said, and I know, Mr. Chair, you're not a fan of the yes buts. With that being said, there is also an awareness of the complications of a statewide uniform approach, especially as it relates to capacity of individual taxing jurisdictions to go without a significant portion of the revenue for the time being. So we have thousands of taxing jurisdictions, and as you are well aware, and this committee is well aware, they are not created equally, both in terms of their reserve capacities. You can look at the state auditor's guidelines on the reserves that local governments have, and their tax base. And so that is something to absolutely consider. The other thing, of course, that goes into it is that when counties, cities, school districts, townships pass their levies and budgets in December, they are planning on two payments basically to make up most of their revenue, and that is May 15th and October 15th. So depending on the utilization rate of a program, it can obviously have extreme dire effects in terms of mandatory spending areas and operational capacities. So something to keep in mind. The third thing takeaway is that counties are consistent that any program should be easy to administer and have clear non-subjective guidelines, and also be transparent and easily relatable and understandable by the taxpayers themselves. On this item, Mr. Chair, we are still gathering feedback on your delay of the state general property tax and what that would actually mean to administer for counties. But I think that in the 8 hours or so I've gotten responses, there are some immediate questions in terms of the programming capacity to actually delineate out just state general and reissue the property tax statements in the time that you'd like us to. So we'll continue working with your office on kind of what the actual programming complications may be. The fourth takeaway is that of the counties that are discussing or considering relief, and again, that's probably close to, I think, 43, 45, we might be up to nearly half the counties as of today. Most counties are formatting their programs or discussions around one of the following options, and I'll give you two. The first and probably most common is delaying or abating late penalties for late property taxes to a certain date. There's not uniformity on the date, although the most common dates that I've heard are either June 15th or July 15th. We have some counties have even decided to go out as far as August 1st. But being clear, I think on this point, the counties that I've talked to have really teamed up with their local chambers of commerce to basically underscore the message that property taxes are still due May 15th. Counties don't have the ability to change that May 15th property tax. The only thing we can do is abate the penalties. And so one of the concerns is that most counties assume that 95 to 98% of property taxpayers will pay. But if let's say 20 or 30% of folks utilize this program, or even 50%, what are the operational and cash flow capacities to actually administer something for a spate of a month or 2 months? And so we are working with chambers to make that message clear that, hey, taxes are still due May 15th. This is really for only those who have been impacted for COVID. So I want to thank the local Chamber of Commerce for working with their boards to structure that outreach. The second thing that we've heard is from counties, particularly in the metro and kind of suburban area, is the reduction of the penalty rates of late payments. So we've seen some counties, whether it be Sherburne or Pine County, say that they plan to reduce the late payment rates from something like 5 to 1% or 2 to 1% for a time being, to provide some relief as well. In both these scenarios, I want to underscore that it's not just counties that are impacted by these county decisions. And that we've been clear, AMC that is underscoring the need to proactively reach out to communities, the cities, the townships, the school districts, to one, get their input on these proposals, and two, to kind of try to assess what this would mean for their own cash flows. So Mr. Chair, in summary, I am wrapping up. Counties are stepping up, and I want that message to be clear in front here. From Hennepin to Winona, to Pine to Candy, Ojai, to Cass, to Dakota, to Lake County, across the board, every single member here has a county in their district who is acting. We have heard the calls from businesses. We have heard the plights that have been mentioned on this call, and we are acting. Two, counties are in a huge amount. We're seeing a tremendous amount of coordination and communication amongst each other right now. I don't know. I know that in bad times, it brings us together as a community. And I would say the same is true with our members. We are seeing a huge amount of Zoom meetings and go-to meetings and conference calls on, hey, folks, what are you doing? How can we format this together as a region so that it's more consistent with the taxpayers, so there's no confusion? So I just want folks to know that this isn't happening in a silo, and that members are talking and communicating with each other. And the last thing that I'd leave the committee with is that clarity from the state is needed. I would characterize that counties are right now in a holding pattern. While I talked about 43 counties either having discussions or interested in having discussions about property tax relief, they are waiting for the state to see if they act. And so knowing if and when the state might act is important for if you are expecting and wanting local governments to act on themselves. And the last thing is that we're exploring if there isn't a statewide solution, and this is going to be county actions, whether or not some clarity is needed surrounding county's authority for settlement powers. And I really appreciate the Department of Revenue has been good on trying to give us advice as we go through these areas of gray areas. But one of the questions that we have is, do we have the authority, if we were to delay late payments, to make settlements to local jurisdictions kind of as the receipts come in outside the statutory dates of 60 days that we have? And I just appreciate the Department of Revenue looking to give us guidance. But if there is a need for clarity and clarifications in law, we would be interested in working with the Senate and House to make those necessary changes. So thank you very much, Mr. Chair and members, and I'd be happy to answer any questions if you have any.
Thank you, Mr. Hilgert. So we're going to go to Gino Fragnito for just a couple minutes, and then Commissioner, we're going to kind of wrap up with Commissioner comments, and we'll have a few minutes left for members to say a few words. So, Gino, go ahead.
Thank you, Mr. Chair.
I should say.
Thank you, Mr. Chair. I'm Gino Fragnito, the Government Relations Director for the Minnesota CPA Society, and appreciate the opportunity to talk this morning to discuss a little bit about the draft you're working on in committee. I'd like to talk about sections 3 and 4 of the 179, section 9, 10, and 11 related to penalty exceptions. And when session began Section 179 conformity was a priority because the tax liabilities that were caused by nonconformity last year, thousands of taxpayers were facing tax liabilities on money they didn't earn, and those liabilities have often been larger than their federal liabilities. Now add additional uncertainty, loss of revenue, and no cash flow, and the need for conformity is even greater. As you know, the last few weeks have been chaotic for everyone and unsettling for many. We all know that the tax filing deadline for many taxpayers was yesterday, but we also know that many are still trying to assess their financial situation and determine how much tax they owe. This year, filing is taking much longer for many reasons, including the last couple of weeks, CPAs have been focusing their time and energy advising taxpayers and helping them apply for the SBA loans in an effort to keep businesses solvent. And as soon as the federal deadlines were extended, taxpayers stopped sending their information to their CPA. There was some misunderstanding. They weren't certain on what was applying to Minnesota and what was federal. And so they shifted their time and energy to more pressing issues. CPAs have clients in many states across the country and do find it concerning that an overwhelming majority of other states have found a way to provide extensions and provide some short-term relief to those taxpayers. We've had hundreds of CPAs share their concerns with the department, and you have probably heard from many as well. They're not asking for forgiveness, they're asking for more time to figure out the financial situation. As I mentioned, Minnesota is one of 5 states that have not yet extended the filing deadlines. Extending these deadlines and eliminating penalties and interest will provide clear guidance and a little more time for taxpayers who find themselves in an untenable position of owing taxes and not having immediate access to cash to actually pay those. Thank you, Mr. Chair.
Thank you, Mr. Fragnito. All right, we're going to have Commissioner Bowerly take us down the stretch. Members, we're going to have time next week too to have comments and more time available for questions. We do have to cut off at 10. I want to give the commissioner ample time. We may have a few minutes left after that to have some discussion. I'll mention 2 things. One is the department, I know, has been in discussions with some of you to help relieve some of the pressure and find opportunities to keep you solvent and keep the businesses running. Can't always do it in every area, but I know they have been working. They have delayed certain payments, and that has been helpful. Continuing to work with them, and people are continuing to have discussions. So we thank the commissioner and the department for their efforts there. Secondly, one thing I did not mention at the beginning is we do have several conformity issues that we're all aware of, that both from last year and the ones that came up as a result of COVID relief. We can chat about that next week as well, but there's about 3 different areas. And if we'll have to have a conversation about the conformity of those areas because it can be good and bad. So Commissioner, with that, thank you for being with us, and take the floor. We won't limit you to 5 minutes right now, Commissioner, if you want more than 5. So go for it.
Thank you, Mr. Chairman. My name is Cynthia Bowerly, and I'm the Commissioner of the Minnesota Department of and Mr. Chairman, I appreciate the time. I will actually be rather brief. I want to just follow up a little bit on your comments. I really appreciate the work that we've been able to do with Ms. Kadoun, Mr. Fragnito, Mr. Hilgart. We know there are a lot of pressures facing governments and facing businesses right now, so we appreciate the position the counties are in. They are trying to make sure that they can deliver services, and they also want to make sure that we're working with businesses to keep them afloat. We appreciate that the feedback that we've received, that we need to provide more information for our customers about what it would look like to abate your penalty or interest. In many instances where we have been able to, we have extended payment deadlines. Announced grace periods is what we're calling them, which essentially means that we won't be imposing penalty or interest. For every other business or taxpayer who is impacted by COVID, we have we've heard the need for additional clarity, and we have added information to our website and sent information out via our Gov Delivery about information on our COVID website. So we have a COVID web page up. that includes information by tax type, different questions and answers that we've been receiving from everything from income tax to provider tax to property tax. And the one area I want to be really clear about today is the department has authority under its normal statute to abate late payment or late filing penalties or interest if for reasonable cause. And so reasonable cause, of course, can mean a number of different things depending on the circumstance. In this critical time, we have added some detail about what we believe that means in this COVID-19 pandemic. And so, for example, if you cannot take care of your affairs for a time because you or your immediate family member becomes seriously ill with COVID, or if you lose your job or your business has to close, which makes paying the tax an undue hardship, or if you have significant interruption of your business or employment and cannot manage to pay your taxes with the additional resources, for example, some of those federal loans, which we recognize are taking some time. So those are the circumstances under which the department will waive any penalty or interest for late payment. So what we want our customers to know is pay if you can, and if you cannot, we will work with you on the back end after you've made that any payment that you can at whatever time that you can to abate that penalty and interest. So we certainly, as Minnesotans and as a government entity, we can fully appreciate the complex and uncharted territory that we are all in. And so we have been working very hard to make sure that we listen to the feedback that we're getting. We make all of these decisions, as I think what you heard from Mr. Hilgart, as the counties do, with this need to balance the interests of our customers and the need for them to be able to maybe keep some of that tax revenue for a short period of time, and with the state's need for that revenue to continue the essential services. And those costs, of course, are significant, and those resources are needed as well. So that's the balance that we're trying to strike. And we also want to be really clear that if you are impacted by COVID and you are therefore paying or filing late, we will work with you. We do encourage everyone who can to go ahead and file. It's important data that is needed. And Mr. Chairman, while we appreciate seeing your bill, we know these topics are of interest and have been. The full 179 conformity is, of course, something that was in Governor Walz's tax bill last year. And I think our conversation going forward, we need to focus on understanding what our interim budget projection will look like. As was announced earlier this week by the governor and MMB, the state will be doing an interim budget projection for fiscal year 20 and 21. We should have that at the beginning of May to understand what our current financial situation is, and will help guide some of these decisions. There are a lot of unknowns at this stage and uncertainty. And as Mr. Wilm said, the tracking sheet, of course, represents the revenue estimates. It does not include any of the cash flow risk to the state. And so that is information that we should consult with MMB about in terms of cash flow risk. So, Mr. Chairman, I appreciate the opportunity to share a little bit of information. I want to express again our appreciation for the partnership and the feedback that we've been getting. We've been working with a number of the members of the committee as you have constituent requests and concerns. It helps us understand what our customers need in terms of what tax relief is available. We have been working, as I said, to provide as much guidance as we can about our authority to waive that penalty and interest. With the counties, we do not have the ability to actually move a filing date or a payment date, but we can work with folks on the penalty and interest. And we've done that wherever we can as we consider the state budget as well. So, Mr. Chairman, I will end there. I'd be happy to take any questions, but I also want to be respectful of the committee's time. Thank you very much.
Thank you, Commissioner. With that, that concludes all the testimony. Members, if you have a question or comment, if you know how to use this thing, you can raise your hand. I don't have all of you on my screen at one time. There's just too many. So you can raise your hand on the application. So anybody have a thought, question, comment, members? Senator Anderson?
Thank you, Mr. Chair. And I just want to thank our testifiers and Commissioner Bowerly for appearing today. As we know, this is crushing testimony, but this isn't the first we've all heard of this. We are repeatedly hearing stories like this day in and day out, and have for the last 4 weeks. It just gets worse and worse. So I guess the only thing that I would encourage, and I appreciate the agency's willingness to work really hard on this, is to do whatever we can to be proactive and not reactive, to make sure that business owners don't have to go to the department for help, try and figure out a way, because everybody's in this. Every business is in this. This is not something where a handful of people are going to have problems and they need to go to the department for a little reprieve. And I understand and appreciate, again, all the work that's done, but anything we can do to make sure they don't have to, as they're trying desperately to reopen their business, to then try and navigate the bureaucracy of state government to figure this out. So I thank you for the hearing, Mr. Chair, and I'll mute myself again.
Thank you, Senator Anderson. We had Senator Pratt. Did you have a question? Then Senator Senjum.
Thank you, Mr. Chair, and thanks for having this hearing. It's been very useful. I guess a couple of things I'm thinking about, and a lot of what I heard was helping us get through the crisis and maintain cash flow. Does anybody have any thoughts about what happens after the stay is lifted? And then, maybe to Commissioner Bowerly, what are the challenges we have of pushing tax receipts out from one fiscal year to another?
Commissioner, you want to answer that one? Still with us, Commissioner?
I am. Sorry, Mr. Chairman, working the mute button. Mr. Chairman and Senator Pratt, moving tax receipts from one fiscal year to the other, as Mr. Wilms suggested at the beginning, could present some cash flow issues for the state. I would need to defer to Minnesota Management and Budget about that. They are the, of course, keepers of how we're landing our fiscal year. And I think that budget projection that will be coming in May will have some of that critical information about where they project we will be. Of course, the February forecast had one set of information. As you saw from the April 10th update to the an economic update issued by MMB, there are a lot of things that have changed. And so that's one of the reasons that they will be doing an interim budget projection. So we can certainly consult with them and get back to the committee about what they know right now. And I anticipate that a lot of that information won't be known until that interim budget projection is completed.
Thank you, Commissioner. Senator Pratt, any follow-up?
Yeah, but I think it's probably more appropriate for MMB. So I guess, again, my question to the testifiers, help me understand, once the stay is lifted and you're able to get back to work, how long do you think it's going to take you to get back to normal or something close to that?
Mr. Sturgis had his hand up, so we'll just go to him. Mr. Sturgis?
Thank you. Thank you, Senator Chamberlain. So Senator Pratt, I'm glad you brought this up, because a lot of the misnomer is once the stay-at-home order is lifted, that maybe things start going back, and that will not be the case. We don't know the specific details of that. Obviously, nobody knows how long it's going to take. But what is the consumer demand going to be? For example, to Eric from Craigan's, I came from the hotel business myself. When will that demand happen? So we have to understand that the consumer is either planning or not planning right now. So when the stay-at-home is lifted, did Mr. and Mrs. Smith with the 2 children decide that they're not going to travel because they don't want to be on an airplane, or they don't want to travel because let's wait a couple of months. We believe that we're not going to be back to normal till next year. And so let's say that let's just use for instance, let's say that that the governor does not extend the stay-at-home past May 4th. Okay. Assumption. Now, we don't believe people will travel in May. The kids will start getting out of school in June, or out of homeschool in June. And maybe people will start traveling a little bit then, but the busiest season, especially for the service industry, the hospitality industry, is going to be once the kids get out of school until they go back to school. And we don't really believe people are necessarily going to travel. They're not going to plan to travel. So we don't believe that's going to come back until next year. But maybe we have 10%, 15% return after the first 2 months, and then after that. The last thing I'd like to say, real quick, if I could, the real estate tax. Please understand that a lot of us, we're leasing buildings. So in our lease, if we don't make that payment, even though the landlord might be able to get the penalty forgiven, we've now defaulted on our lease. Right? And it's not as easy as saying, please go ahead and work with your landlord. Yes, we'll try to do that. The last question I'd ask is, if we do push the real estate tax, or at least defer the penalty, abate the penalty, will that mean we'll do the same thing for October? Because if it's deferred until, say, August, and then 2 months later we have to now pay the next real estate tax, that's going to affect us majorly. I'd like to hear from other people, but we don't believe we're going to come back, by any means until next year. We hope to 3 months after, meaning 3 months would hopefully be, say, August, that our August numbers are not down 90%, but we're only down, say, 50%. But that's aspirational. Thank you.
Thank you. We have about 5 minutes left. So Senator Senjum, you had your hand up.
Yes, thank you, Mr. Chair, and thank you for doing this. Thank you for all the testifiers. I won't pontificate into the pain and agony because it's real. We felt it. We hear it. We know it. I just had a request, Mr. Chair. As we go through this, and Ms. Kadoun pointed it out, the reserves that are held by cities, counties, school districts, perhaps townships, I think it would be valuable if our committee members had their hands on that list, and whether it comes from the state auditor, or I'm not sure where we get it, but I would like to urge that we try to get some sense of reserves held by the respective local units of government, so that we have a little bit more of an idea of what the reserve situation is out there. Everybody knows what our reserves are, I think, but we don't have a real good idea, I don't think, of the reserves held by local governments. So I would just request that list.
All right, thank you. We'll get on that. Probably the state auditor has that, I would imagine. So thank you very much. Well, with that, we might as well, I don't see any other hands up. Members, thank you for your patience and your time. Thank you to the staff getting through this and getting it done. It's not easy. We understand that things change rapidly. So thank you very much to the staff, the smart people, Rudy and Brian, and all of you. And thank you to all the testifiers for doing what you do and making the state run and keeping the wheels turning. Vitally important, as you know. Thank you, thank you, thank you. And we will have some more of this next week. We don't know what day exactly. We will do our best to keep everybody updated on what we're going to be doing. I think we might have a second package next week that would be added to this. We wouldn't be in the same bill, but added to it. So thank you very much. And with that, we'll end the meeting and prepare, be ready for next week. All right. If you have any questions or comments, you know how to get a hold of all of us. Take care. Thank you very much. And we'll see you later.